A bearish spike in early December injects uncertainty into the market as to the longevity of the large uptrend. Indecision is prolonged at current highs due to the normal period of low activity at the end of the year. Closer examination reveals the chart has essentially stood still, mainly within the real body range of the large bearish spike. Towards February, there is a noticeable decline with the last two downswings for the increased probability of not just a flat top, but a descending triangle in a more neutral to bearish context. For both patterns, the key lower boundary of support would center around the low and close of the large bearish candle from December 8th. The bearish reversal does come, but it is a return back to a flat top range because the minor spike back towards 29 after February 10th invalidated a possible descending triangle by breaking over the high of the last downswing for a more invalid downtrend line. Now the lower boundary for the flat top and future resistance is extended to 28 due to the gap down. It is also worth noting the general volatile but flat price action in early November 2016 that has often been seen with double tops and double bottoms. This is the same phenomenon, except in this case it represents indecision and contention prior to the formation of the flat top range and its widened lower boundary. In the broader context, the flat top produces a moderate correction that is quickly reversed by a larger but still strict double bottom that starts an aggressive uptrend. Bullish spikes in April finally begin surpassing the wider upper boundary of the double bottom, stemming from the gap down candle. As a wider horizontal range forms at new highs, the old flat top range reverses roles to provide solid support. The period from June to October can be characterized as a potential triple top. This situation also highlights a chart that has several horizontal ranges in various positions to have overlapping areas of interest around the central 29 to 30 area. Uncertainty looms as the triple top is delayed and short-term volatility rises. Here is an interesting case where a gap down forms a wider neckline area for a relatively strict reverse head and shoulders outline that was more difficult to spot due to the greater volatility in October and November. This in turn led to the failed triple top transitioning to a wide horizontal resting phase in a regular bullish continuation. Naturally, the old highs around 3420 now present a key focal point of support during another period of increased short-term volatility. A heavily bearish situation sees the development of a large downtrend that is rapidly accelerated by small double tops, completed by gap downs, that cross the same downtrend line used to mark the outline of a wide descending triangle. Like with other examples, the descending triangle is slightly more difficult to spot in early 2018 during its development due to the greater volatility that includes the gap downs contributing to the widening of the lower support base around 3420. During a substantial recovery, a large ascending triangle presents the opposite situation with a widened upper boundary due to increased volatility and gaps. In fact, the upper boundary could have been extended to 2525 to mark a future range of wider support. The ascending triangle encompasses horizontal ranges. First, there is a failed double top from April to May, then a minor triple bottom in more of a continuation context. The ascending triangle's main uptrend line runs through these areas and still intersects close to the center of the March upswing that began the recovery. This points to a stable uptrend line to reference in the event of any sizable corrections in the future.